Welcome to Nasdaq TradeTalks, where we meet with the top thought leaders and strategists in emerging technologies, digital assets, regulatory landscape, and capital markets. I'm your host, Jill Malandrino, and joining us this afternoon, we have Alex Lintner, CEO of Experian Software Solutions, and Daniel DeMeo, CEO of Lendr. We're here to discuss the challenges that businesses face managing operations in credit, fraud, and analytics. It is great to have the both of you with us. Welcome to Trade Talks. Alex, I'm going to kick it off with you. Let's talk about some of those challenges that you see when it comes to managing operations in credit, fraud, and analytics.
Well, Jill, if you think about the traditional way of doing things, certainly some benefits associated with that, relying on the internal expertise of your data scientists, explainability of the models that those people can provide. But life has changed. Life has changed, especially on the fraud side. The fraudsters, they adjust their models more frequently. And even if you just look at the situation of consumers, when market changes occur, you can't take as long as it traditionally, with that old method, took to adjust the model. The average time lies between 12 and 15 months. And in fact, with those manual methods, half of those models don't ever go into production. So what you have now is you have new tools available that allow you to develop models much faster, to detect model drift, which is why half the models don't go into production automatically. And that support for the data scientists gives the businesses additional agility.
Yeah. And Daniel, it's an interesting point that Alex makes, that the bad actors are leveraging the same types of emerging technologies as are the companies looking to fight the bad actors. So what are some of the challenges that you see when it comes to credit, fraud, and analytics?
Yeah, we approached Experian in early 2022. We're a smaller company, and we saw a great opportunity to partner with Experian to take our data, to match it up with unique data sets that they have, and also for participation in the Ascend platform, which helps us and assists us in building the score and using the data sets to develop potent variables to make the decision between those are good collections risk and those that aren't, but also created a program where we're monitoring the score as we put it in place and strategizing around what other data sets or data elements emerge that will be more powerful in the mix, because the ground is moving under us, the world is changing, and the old data sets, ways to detect collectability or not, aren't necessarily those that last the test of time.
Yeah. And Alex, let's talk about some of these solutions here. How is Experian helping businesses overcome these challenges?
Well, Jill, you just had Daniel describe different processes, onboarding the customer, which has, the element of are they creditworthy, so evaluate their credit, and fraud detection, potential fraud. Then you have customer management and life cycle. It's already a customer, and at the end, if you have to manage collections. Those are all separate processes, but the consumer wants to only feel that they're dealing with, in this case, Lendr, with the organization that has provided the funds to them for credit. And traditionally, what clients had to do is they had to buy those solutions from different vendors. We provide this Ascend platform that has been referenced by Daniel, and basically provides functionality that makes data integration, whether it's Daniel's own data, their company data, our data, third-party data, super easy, and connects those processes with easy sort of low-code or no-code functionality, such as drag and drop, which we all now know from our iPhones and Microsoft and other providers. That kind of technology previously has not been seen in financial services. This integration, seamless integration, and user interface that's, I'm going to call it Apple-esque.
Mm-hmm. And Daniel, I thought that was a good point that you had made earlier, that it's the relevancy of the data as well. It's only as good as the output.
Correct. And what we were seeing is, because of some instability in our score, because it was somewhat dated, we weren't able to get the predictability relative to how we manage our business. Now that we have all that in place, in fact, in the last couple of years, both the years we doubled our business over that 2-year period, that the score, the process, the platform has been in place for us to modernize and stay current with how we're judging customers relative to funding for small businesses.
Right. So, Alex, what do these enhancements mean at the end of the day for consumers?
Well, I think there are two benefits. First and foremost, the consumer wants to be protected from fraud, just like the lender themselves want. But secondly, they want to have access to credit. And there is a little bit of a trade-off going on, because if you set up a fraud models, you're trying to detect signals of, is there potential fraud? And if the fraud models are too tight, you have what's called false positives. So maybe they think Alex is a potential fraudster, though I'm not. With these new technologies, what you can do is you can make sure that your fraud model and your credit models work together so that you can minimize the false positives, and therefore access to credit for the consumer is secured.
Yeah, well, it makes sense to me. This way you're not operating in a silo within your own enterprise.
That's it. That's it.
Right. So, Alex, how I would assume Experian is leveraging some sort of type of artificial intelligence to make this process more effective for consumers.
100%. The way I liken it is if you get in our cars nowadays and compare that to how it was 5 or 10 years ago, you pull out of a parking spot, you back up, and your car starts beeping because there's somebody coming down the parking aisle. Or, when you want to change lanes, it beeps because there's somebody in your blind spot, so that there is support for the driver. The same thing basically happens where AI and Gen AI are being used in credit modeling and fraud modeling. You give aid to the data scientists. So when the model drifts, when new variables occur, when fraudsters act in different ways, they are given signals right away, so they don't have to manually look for those signals. And that accelerates the process incredibly, adds agility to the business's ability to react, and therefore adds value.
Yeah. And Daniel, how has Lendr utilized these emerging technologies and Ascend technology platform effectively?
Well, in a sense, the lack of predictability put us in a position to not be able to have a lot of confidence in the future. Confidence in the future and having a destination that has reliability and confidence because of the stability of the score and our ability to target write-offs or charge-off rates puts us in a much better position up and down the business relative to attracting new investors, improving and approving more customers for credit. It just strengthens the whole capability of the business because credit scoring, data sets, all this information is core and germane and essential to us running an effective credit business.
Yeah.
Jill,
well,
typically,
I'm sorry.
Typically, a company like Lendr, they had to buy, like I said at the very beginning, these solutions from different vendors, and then they have to stitch it together. That work's not necessary anymore, since we do that through the platform, and that brings that agility and ability to grow because they can focus on what are their important business decisions rather than doing IT work in the background.
Right. So a couple things here, and Daniel, it reminded us of an interview we did yesterday in the healthcare space. And one of their points was the more effective and usable and clean data we have, the better it is for us to be able to make those clinical decisions. And it sounds as if with the way data is evolving, it's like that across every industry, across the board. It's allowing you to make better decisions.
Yeah, we're looking for patterns and signals constantly to get ahead of good opportunities, but also difficult situations where we might see fraud or customers not willing to spend. But it's all about the data. For example, in the first version, we have 2 versions in the score in just 2 years and deployed it in the market. We delivered 3.5 million data points to Experian. We delivered 6 million data points the second time through to augment our models and continue to build on it. They match it up with probably billions of data points because they have all this experience and history in terms of the data on these customers, which just strengthens the decision on behalf of the customer. It makes it better for the customer because we're making more accurate decisions on their behalf.
Right. Alex, somewhat off topic here, but you had mentioned that you don't have to leverage as many vendors. Does that help to also mitigate cyber risk as well, since you don't have as many touch points and third parties that, you are vulnerable to?
100%. I'm glad you're bringing it up. Security is one of the major benefits of being on a single platform because all the security updates, all of your listeners, I'm sure, know how that works. But basically, there's something called SHA protocols that the government collects. Everybody has the duty to then look for vulnerabilities through those. That happens every 2 weeks, but models don't get updated that quickly. We can now, in a platform, we can update silently. So the company doesn't even